Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today's video we're going to discuss something that is very important and up for debate. Is Bitcoin in a Wyckoff accumulation formation, or is Bitcoin in a bear flag? Those are going to be the two questions that we are going to analyze in this video, so make sure you stick around until the end. Alright, so first thing is first. Basically last week we traded sideways. Let's go out to the weekly time frame. Alright, so basically you can see here for the last 4 weeks we've been trading sideways. 2 of those weeks closed bearish and 1 of the weeks closed bullish. Depending on if we're above the open or not by tomorrow will determine if we close bullish this week or not. Where we are currently on the chart, I would suspect that we're probably going to close bullish. The thing is, we are into weekly resistance, and as stated in last week's video, if I put a line over here on this bearish candle right there, you can see that this swing low right here has basically, once we got below that, you have not been able to close a weekly back above that price. So it is another form of resistance. The yearly open is up there at $46,211.24. This was my target both times Bitcoin traded up close to that level and retraced. On both occasions I was expecting this to be tested. We did not do it. We fell back. So basically that's why we have a near-term bullish bias on Bitcoin, just to get up there, as by trading up so close to it and reversing brings in sentiment. It pulls in short sellers because they see this, and all these top wicks look like selling pressure because that's how retail traders have been taught. They look at long wicks and they assume that that's selling pressure, so they're looking to get short here. This is also where a lot of sell stops are. Anybody that got short, that makes them higher buyers in the market. And what we know for sure is the market does like to attack higher buyers, just like it likes to attack lower sellers. So if there is a lot of higher buyers into the market, we're going to go up and test that. Then we will see if the market participants want to sell to those higher buyers, or if those higher buyers become a source of demand to help fuel Bitcoin on up into higher prices. All right, so first things first, is this a Wyckoff accumulation formation? All right, so I have a couple photos here. I'm going to pull not this one up first. Let's look at this one first. This is a Wyckoff accumulation formation. And if you notice, one thing you have here is what is called the springboard, or where price liquidates the lows. There's the low there. You come down, you liquidate that low, and then what that does is that liquidates a lot of lower sellers, and then people have the opportunity to buy into those lower sellers, and with that you get a bullish price action after you liquidate those people. So once the liquidations occur, you trigger all those lower sellers in the market, then market participants buy into those lower sellers, and that completes the formation, or the Wyckoff accumulation. Here is another Wyckoff accumulation schematic. This is the same scenario. You have your lower push here, sets in a market low, then you trade sideways a little bit. Now on this particular one, you take out the high, then you run all the way down and take out the low, then you trade sideways for that accumulation, because once again you are triggering all those lower sellers into the market. If we leave this and then go look at the price action, you don't have that spring yet. All right, so this is a normal push lower. This is your expansion phase to the downside. This is your swing low. So before one could even say that you do have a Wyckoff accumulation formation here is on the spring, you do not have the spring. In order to have that spring, you would need price to trade down, liquidate this low. Now one's going to say, well, this was the low and then this was the spring. Well, if you go over here to a daily time frame, you're going to see that that is not the case. This is your low here, and 2 days later you put in this swing low. This is your expansion phase moving lower. Then you can see 2 days after you set this low, you set a new low. Just because it's a new weekly candle that did that does not make that the springboard. You have to accumulate, go up, take out the swing high. You've done that. So this swing is where you needed to get below to trigger that, to liquidate this candle. That would have been your springboard. Then if you were accumulating after a long phase, after you take out that swing high, then you run down, take out this swing low, then we could potentially say that Wyckoff accumulation could be happening. What you've done basically is on the push lower or on the expansion phase to the downside, you set a near-term low, then you went up, you took out an old swing high, then you came down and made a higher low. So what you essentially are doing is this. So this is a bear flag, all right? A bear flag is when you're basically trading inside of a channel. Now I do have another picture here. This is called the schematics of accumulation. And as you can see, there are a lot of familiar patterns inside of this chart work. You have a cup and handle, you have a head and shoulders pattern, you have a double bottom, you have a descending wedge, and you have an ascending channel. Now, according to this company or these guys, they are calling this all accumulation phases through the Wyckoff scenario. Instead of them calling that a bear flag, they are calling that a Wyckoff accumulation formation. Like I said, I don't know anything about them. I'm just using their pictures, their references as a guide, a tool to help you see. This is going to be more of a bear flag than an accumulation or a rising channel. One other thing that might be helpful in understanding how chart formations and patterns work is in the direction of the trend is what's going to determine whether or not you are in an accumulation factor or zone or not. You can build a rising channel and then break out of it. That would be the determining factor of whether or not this is a legit bear flag or not. Also notice your weekly RSI down here. You're not even at the 50 yet. So being up here at the yearly open would put you at or around or even slightly above your 50 on the RSI. On the daily time frame, you have absolutely come out of the 50. So you are near-term bullish on the daily time frame. As long as you're trading above the 21 exponential moving average and above the 50 on the RSI, you are allowed to take bullish entries, and bullish entries have been paying off. I put a tweet out yesterday stating that if Bitcoin is going to rip, right now would be a good time to get involved. That worked out absolutely flawless. Price traded right up, made a new high on the day. Everybody was happy in Bitcoin land. You are trading into resistance and there is weekly resistance ahead of you, but we think that price is probably going to go on up there and test that yearly open. So in my opinion, I am not going to get bullish or bearish on Bitcoin as far as longer term until we get above that yearly open. Now, if we do get above that yearly open, liquidate these swing highs and then head lower and break down below the bear flag, we will be looking for a longer term move lower. That will be that capitulation that we will be looking for, and that could signify the very low ends of the bear market phase. And it still could take a lot of time. If you go over here to 2018, when you had your bear market phase, this isn't it. When you come over here, let's get rid of the moving average and the RSI briefly. So when you made in this swing low, this was that liquidation, or this was that capitulation event. This is the move that we are looking for. We're looking for consolidation similar to what we've seen back here. Then we're looking for that to pull back. We have several metrics on Glassnode that could suggest that that's what we're potentially going to see. All right, so this is the same what we were looking at. This is your 6K floor. 6K was the floor everybody assumed back then. When this consolidation phase was going on, there was the capitulation run. And as you can see, this little tiny thin green line down here at the bottom of this chart, this is where you want to be a buyer. It's always been that way. Every time Bitcoin has come into that green zone, that has been a level of which buyers stepped back into the market. You can see that you're consolidating just above that green zone. All right. There's a couple other metrics that could suggest that we will potentially see that capitulation run lower. This is the trend score. This shows you with the white areas, you can see that there was accumulation going on the move lower. Once we set the new all-time high and Bitcoin started its bear market phase, you can see that people were accumulating this. Why is this important? Well, so here you have your total supply and loss held by short-term hodlers and your total supply and profit held by short-term hodlers. You can see the total supply and profit. Also, this is roughly around 190,000 coins, 190K Bitcoins. This over here is 2.5 million. So there is a lot more a significant amount more of long-term hodlers in loss than there are of long-term hodlers in profit. So that in itself could indicate that, yes, there probably is a little bit of accumulation happening down here, but the overall majority of your short-term hodlers are in the red. So that capitulation event or that move lower could be the final nail in the coffin to shake out the weaker hands. Even though price is moving, well, slightly up, this will probably tick down, since now that we're moving up, this data is a little bit behind, but you can see how it is moving higher. So short-term supply in loss is moving up, and your short-term supply in profit is moving lower. So that's to be expected. That's just one other metric that could suggest that we might see that capitulation move to the downside. And this is another metric here that could suggest that we're not done yet. This moves up. The orange part is trending higher, as well as price. Over here, when you put in the all-time high, look how much lower you were than where it was over here. As this big, massive 50% drawdown, it wiped out a lot of people. Now we put in the new all-time high, and this is trending lower, as is price. If you look at the longer term, I mean, this is the target, or would be the target. If you break down out of this bearish flag looking formation, there is going to tell you, yeah, you're probably going down lower, probably coming down here to liquidate that yearly open of 2021. That gets you underneath all of these longer term wick lows. Right, so we do know that there is a ton of lower sellers sitting in the market under $28,000. So if price reaches down there, it will liquidate those individuals. But what does it do first? Well, it goes up and liquidates the near term higher buyers right here, setting just under the yearly open. So that's why we want to see a yearly open test. If we get that yearly open test and we get a massive rejection, we're going to be shorting into that, and we're going to be looking for this pattern to ultimately break down. Last week's video, I did a measured move if this is indeed going to be a bear flag, and that measured move target puts us right down there at about $22,000, and ultimately gets us down here to fill this gap that was left open from the CMEs when Bitcoin was extraordinarily bullish. All right, so that's why we're kind of leaning like price is potentially going to make that run down here, close that gap, liquidate all these lower sellers in the market. Then we're going to be looking to be a buyer on Bitcoin. Once again, when I am wrong is if we get above this top trend line. Getting above that could indicate that this is not a bear flag, and it is a rising wedge, and is also a Wyckoff accumulation formation, and you could potentially look for higher prices. So that's where we are. Essentially, Bitcoin hasn't done anything. We've been trading the range. I took a trade this morning and got stopped out. I was assuming that it was I was looking for it to trade a little bit lower so I could get long, but you know, that'll teach me. But we're looking for right now a potential entry on Bitcoin tonight or into tomorrow morning. If this Heath level or demand zone at $41,127 holds, a test of that level could induce a long positions and get us to target the yearly open. Also, one other thing to be looking at over here, let's get rid of this and let's bring this line up to last week's high. You can see here, if I pull this out, this is last week's high. We have not hit that yet. So that's my near-term target. Longer term target is up there. All right. So I am kind of bullish now, looking for this expansion to take place, that yearly open test once again to take place. Then we'll see what happens when that occurs. All right. So you guys have a fantastic day. If you learned something, smash that like button. Also, tell me down in the comment section what you think. Is this a Wyckoff accumulation formation, or is this potentially a bear flag, and we're going to be looking for that gap fillage later on down the road? Let me know down in the comment section. If you haven't yet, make sure you subscribe. You guys, make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.